All right, so now that markets have fallen back to yearly lows, we're seeing people prepare for Federal Reserve to increase rates yet again. Now we are wondering, well, what should we do with our money? Should it be the time to buy? Should we be selling? In today's video, I want to look at some of the top perspectives in the market. We're going to go over what Goldman Sachs has to say, what Barclays has to say, and what Michael Burry has to say, because he recently sold all of his stocks except one in particular, but things are starting to change. So let's talk about it. First thing is that the markets are starting to brace for another 3/4 point rate hike from the Federal Reserve at their upcoming meeting on September 20th and September 21st. The important thing here is that this has been already factored into the market. We have started to see the markets fall for 3 weeks straight ever since that Jackson Hole symposium with Federal Reserve and central bankers from all over the world. So now that we've seen that many prices have already started to factor in this rate hike, people are saying, well, is the bottom in? When we're looking at what is going on with Fed futures rates, we can see that 82% of people are predicting that there's going to be that 75 basis point rate hike, and that is the exact reason why we have continued to see stocks fall and crypto market fall over the last 3 to 4 weeks since we reached that little bit of a peak just a couple weeks ago. Like Bitcoin hit $25,000 per coin, S&P 500 and NASDAQ had a nice little rally, but this is why we have seen prices fall. In addition to what is going on with Federal Reserve and interest rates, we have another very important update coming out from CPI data. The next CPI data release is going to be scheduled for September 13th, 2022 at 8:30 a.m. Eastern time. And this is going to show us exactly what the Federal Reserve has been doing. Has it actually helped combat inflation? Last month, we did see inflation come back down from a peak that we saw the month prior. So ideally, we'd like to see it lower again this month. And then that would be a great sign for the overall market if we saw 2 consecutive months in a row where CPI data was falling. But remember, there's no guarantee, but it definitely looks like this is going to be the case. So many people would say, well, is now the bottom in? Should we be buying? Is now the best time to be buying? Well, there's a couple different perspectives. First thing is going to be from Goldman Sachs. We can see that Goldman Sachs is saying that there are a number of indicators that suggest we are not yet at the market trough, which is the market bottom. Goldman Sachs London said just the other day that looking at 2 key indicators, which are the bull bear market indicator and the risk appetite indicator, these indicators attempt to capture fundamentals and sentiment. They said that these indicators are historically really accurate at extremes in the market. Extreme highs when there's extreme greed and when there's extreme fear in the market. They are historically very accurate. He said, but right now, neither one is showing that we're at the market bottom. So they say that, yes, we have come down, but there's still some more pain to come. Doesn't mean it's a bad time to be buying. In my opinion, I would say, dollar cost average long term is probably the best strategy. But if you're trying to pinpoint the exact bottom when things are really going to flip, Goldman Sachs is saying, not yet. We're going to continue to see more pain. Next key opinion is going to be from Barclays. Barclays recently came out and said that a bounce is possible, but equities are still in a very tight spot. He says in the near term, we could see a rally because we have seen 3 consecutive weeks in a row where prices have fallen, but it's more likely that we're going to continue to struggle amid global uncertainty. And I think that this is something that we have to keep an eye on because Barclays is saying, look, we don't know what's happening with inflation. We don't know what's happening with overall global economy. We're seeing, the dollar continue to increase in strength, but pounds and euros are continuing to fall. So we need to keep an eye out on all of this economic data because right now there's still a lot of uncertainty, and because of that, we can't yet start a rally in the market. That is what they are saying. And lastly, I want to talk about Michael Burry because Michael Burry has historically predicted many crashes in the market, and a while back he had said that we had to brace for a stock market, for crypto, for really an everything crash, and we have seen that already start to happen. So he came out on Twitter just on September 6th and he said, look, crypto crash, check. Meme crash, check. SPAC crash, check. Inflation, check. 2000, 2008, 2022. So many people would read this and say, okay, well, looks like these crashes are now in, and now is the time to continue to rally. But this is a little bit misleading because that's not exactly what this means. When you look at what his actions have shown over the last few weeks, is the most recent filing, 13F filing, shows that he has liquidated all of his positions, sold all of his stocks, except one in particular, which is Geo Group, which is not saying that he is bullish on the market at all. This is saying, look, he is still predicting more further downside to come for markets, and that is why he has put his money where his mouth is. He's actually sold all of his positions except one. And so right now, things are still looking a little bit gloomy, a little bit fearful for markets. Me personally, I would say yes, we have come down significantly. We have seen that now we're back to yearly lows for both crypto and for the stock market. Personally, I'm going to be dollar cost averaging into all of these positions because I'm comfortable buying Bitcoin at 18,500. I'm comfortable at buying many of these stocks, let's say like Tesla, Apple, Google, Facebook, all of these stocks at the prices they're currently at. But if you're looking to try to time the market more specifically, there's still going to be some pain to come according to these top analysts and top firms. So that's what's currently going on in the market. Keep an eye out on those specific dates, the CPI data on September 13th and the next upcoming Federal Reserve meeting on September 20th and September 21st. But other than that, that's what's going on. Hope you enjoyed today's video. Let me know your thoughts on the current state of the market, both for crypto and for the stock market. And I'll see you guys in the next episode. See ya.